After that weekend of rising oil prices that sent crude above $100, investors are watching closely to see how the market handles these elevated levels. We've got tighter global inventories, refineries shutting down in the Middle East. We've got an uncertain outlook, to make it, to put it mildly. We're joined now by John Zechner, chairman and founder of Zechner Associates. John, thanks very much indeed for joining us. I must admit, I was amazed to wake up this morning and yesterday seeing oil above $100 US.
Yeah, Andy, and in fact, I was looking at the futures last night, had them up over 20%, so they pulled back a little bit. But clearly the news over the weekend was more surprising. I mean, the ongoing bombing is continuing, obviously, by the U.S. and Israel and Iran, but the whole idea that, Kuwait, the UAE, Iraq, and now this morning, Saudi Arabia have all announced that they're going to cut back on oil production because there's nothing they can do with it. They can't ship it. It's not safe to ship it, and their storage is all full, so they're going to cut back. So even a tighter supply picture. And on the other side, yeah, you mentioned about, maybe a world release of strategic petroleum reserves. But, if the U.S. is trying to lead on that one, they're in bad shape. I mean, they sort of missed the boat on refilling storage in the past, 2 years or so when oil prices were weaker. They've only got 21 days. That's basically a historical low in there. So they can't really add a lot to the equation on that. The one thing I heard about this morning, Andy, which was shocking, is sort of decommissioning or some Russian oil production. Take them are desanctioning effectively.
Right.
And I thought, wow, that would be something. I guess if they really need supplies in a hurry, the Russian oil is out there. And I thought it goes back to the whole thing of the biggest winner so far in this conflict is Vladimir Putin. I mean, it's taken the eyes off what he's doing in Ukraine.
Yeah.
It's given him a higher price for the oil he is selling. And if he gets more of this, it'll even more. And he'll continue on with his battle. So, I mean, there's a lot of geopolitical stuff going on right now, Andy, and markets are, having a hard time absorbing it all. You know what I found really interesting on Friday was they had that really bad employment number in the U.S. And I was curious to watch what happened to the bond market, because I thought the old thing is bad news, bad economic news, good news for the market. And I know the bonds actually sold off a little more. So clearly the bigger worry right now is the inflationary impact of higher oil prices versus any weakness in the labor market. And, that's got to weigh on stocks at some point, Andy.
Yeah, we were hearing talk of potential stagflation last week, a weak economy with prices still rising fairly briskly.
Yeah, I mean, it's, oil has caused some of the greatest pullbacks in the market. I mean, look at the oil embargo, the first OPEC of the early 70s. That led to probably one of the worst bear markets of the last 60 years. I mean, Desert Storm in the early 90s, even though it was brief, that was coincided with another sort of economic downturn and bear market in stocks. Not that it was solely responsible. Even more recently with Russia going into Ukraine. I mean, as you recall, 2022 was an awful year for both stocks and bonds. So oil is less of an impact in the overall economy. We keep hearing that than it used to be, but it's still an impact. I mean, particularly at the gas pumps and for the U.S. in an election year or sort of a midterm election year.
We have seen selling today in the copper stocks. Maybe we could have a look at Lundin Mining, LUN, or Hudbay Minerals, HBM. Concerns about the economic impact of this surge in energy prices, one of the reasons. Would you be a buyer of copper shares right now, John?
Got them on the radar screen. We had sold a lot, so I don't have a big weight in them right now. And the long-term story is still intact. But beyond what you've mentioned in the short term, sort of the strength of the U.S. dollar is recent strength is taken away from commodity prices a little bit in general. The copper inventories had built up pretty significantly too. So I mean, for all the talk about the long-term demand, it's in the short-term supply is there, even if there's not a lot of new supply coming on. So yeah, I've got a couple on the radar screen right now, Andy, but I'm not rushing out and jumping on those or anything right now. So, I mean, and then obviously we got other things going on in the market too, big, tech trades back and forth. And that was interesting last week. It was actually the best week for software versus semiconductor stocks ever. But that's after 6 months of brutal moves in the other direction.
It's interesting. Yeah, I mean, I know the software stocks are still down, but if we look at a name like Salesforce, CRM, it has had quite a sharp rally off the bottom, like other software vendors.
They really have. They got oversold, and maybe you just overdone in the short term. The valuations are very attractive. I mean, Salesforce, they had decent numbers. You look like a MongoDB. Adobe is coming out this week. Constellation was out today and was relatively good. So some of these worries about the SaaS apocalypse are maybe a little overextended. Markets take a narrative and they run it to the end zone in one direction very quickly without thinking about it. And I think that creates opportunities. And I think software will get impacted over the long term by this, but in some ways they have a lot of ways to enable AI in a better way within their own software, within their own ERP systems. And I think the stocks are really oversold on that basis. So we've been picking away in the names, and last week they certainly acted better.
You have been buying some Constellation Software, John, lately. They just reported this morning. I don't think there were any huge surprises in the numbers.
No, there weren't any surprises in the number. Yeah, we've been adding. In fact, I was on Market Call last week and actually put it as one of my top picks. And we hadn't been a big fan for a long time, for years, just because the valuation, 25 times operating cash flow for, 2 or 3% organic growth and completely driven by acquisitions. They were getting more expensive, but it always worried me. And now it's a bit of a different ballgame. It's trading at half that valuation. And in this sort of environment, Andy, I think this sort of plays into their game a little bit more. You saw the numbers in the quarter. They had more than 100% of their free cash flow went into acquisitions. I think for them, this is a good feeding time because there are a lot of good acquisitions out there, and they're going to start to continue to do what sort of made the company great in the first place. You're doing it over at half the valuation. And the other thing, not only have software valuations come down, but a lot of their competitors for buying these assets are private equity. And the problems going on in private equity and private debt right now, and the liquidity issues and all of that. So you may not see as much competitive buying from those, which really gives Constellation a good open lane at, like I say, at half the valuation. So, man, yeah, I like it in here. And I think, and the numbers, yeah, it's not a great organic growth. It never has been, but the acquisition strategy has worked. And now there's, more in play. And, for all the worries about Mark Leonard having left, it sounds like Mark Leonard's been involved pretty directly in this most recent attempt to buy Sabre down in Texas.
Yeah, that would have been a big deal. And the market apparently was relieved that they didn't push ahead all guns blazing on that because Sabre has quite a bit of debt.
Yeah, and they've gone more the buying private companies, small private companies with vertical market software and integrating them. That's been their game plan all along. So going to Sabre would have been certainly a bit of a change up. I mean, I won't say they won't necessarily look at other public companies if valuations get as depressed as they are in the private market, but it's not been the way they got their growth over all these years. That's for sure.
Thank you very much, John. Really appreciate it.
All right, Andy.